The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 4th day of April. My pleasure to be here. This is the Tiger Technicians Hour, noon till 1 p.m., Monday through Friday. Now, this is going to be very important. We've got, Tommy Jr. just did a great wrap-up of where we are, what we were doing earlier. So let me do this one at a time. The E-mini is down 9. This is the S&P E-mini at 2604. And it was down much sharper earlier, but it did not even get close to the 2552 level of 3 days ago. That's with the whole China thing, the news, tariffs or whatever. This is going to be very important. There's a pattern that's talked about on Wall Street. It's called hammering out a base. And what I'm looking at here is that the arch formation has been successful in the E-mini because to this moment, it's had every opportunity to take out the 2533 round number low that was made on the 9th of, is that the 9th of the 7th? On the 6th of, that was the 6th of February, on the, so there's 2533, let me just double check here, 2532. Oh, yeah, that's right, that's the 2. So by 50 cents, there was a successful mini test within 3 days of the low that was made on February the 6th in the E-mini. That's because it trades overnight. The high that was made on January the 29th at a peak deal last night in the webinar, we just went through so many of these Ds. And what I was saying is that on the way down, we've made a leg D and now a trough D in the E-mini. So what happens at this point, I was expecting some kind of a bounce, and that bounce should be not expecting that we'd be down almost 600 points, actually 600 points in the futures on the Dow, 60, I think it was about 60 points in the E-minis. But this is very important. We're only down 375 right now. And there's a flat stochastic. Flat stochastic is really not good. You need to make the V-shaped recovery. But what's really important is that the stochastic on the daily chart, this is the daily on the left, has been improving, while the histogram, the distance between the MACD's fast-moving average, that's the 9-period differential, the green one, and the slow red one, has been improving, shown by the histogram right here, these vertical lines. And that's saying that there's a really good chance that because there wasn't a breakdown and every opportunity to break down this morning, that there's a chance now the 2630 9-period exponential moving average can be hit, and we can go even higher to the 2649 level. And I'm anticipating we're going to make it a kind of an H pattern with a pretty decent bounce, unless there's some other bad news that's coming around the corner. In a bear phase, bad news just permeates the market, knocks the market down until there's a very oversold condition. That oversold condition is released by either bounces that fail or a V-shaped pattern, spike to the upside. But I would need the volatility index, and that volatility index right now is coming down from the highs, and it did not make. This is the 6th day, 1, 2, 3, 4, 5. This is the 6th day after that peak C was made in the daily chart on the 23rd of March at 2601. And can you believe with all the news that's come out, 2572 and today's high is 2451. This volatility index looks ready to come down some. It doesn't have to break down, but it's probably going to pull back some. And there's a real good chance. Let me show you the shorter-term trading vehicle that we've got. This is the 10-minute E-mini. Now it's in a leg, the second leg D. I didn't get a chance last night to talk about the instant restart in great detail. I did demonstrate it. I showed the pattern. And now what we're looking at is, this is probably not a G/C, but it's probably a C up at a G/C, just to show the 5-minute chart. And the 2-minute chart must probably start, and you move to the upside. Yep, this is A, I really do have to call this a B. I'm calling it a B for now, not an F/B. It looks good, and that G should be a C in the 5 minute. So this is very good action, considering where we were, a terribly oversold condition, held the support, some decent bounce should be unfolding as we speak. Now, this is going to be very interesting. Let's go through the numbers. INDU. The Dow now is only down 64 cents at $64. I'm sorry, at 23,967. There's another nice green candle. Held the 200 period exponential moving average. This is why I love the exponential moving average so much. Look, yes, it touched the 200 period simple moving average, but it's the exponential that's giving all this information and says there should be a rally, and the rally could go to the 24,170s and then maybe even the 24,400s. I am anticipating some kind of I'm calling it a counter trend rally at this particular point. And then you've got your arch formation in the weekly chart. We spent a lot of time on that, and that arch formation has a nice candle so far, but it's only Wednesday, not even halfway through the week, just about halfway through the week. And we'll see what happens. But 24,490s is the 9-period exponential moving average in the weekly chart. I'm not sure we're going to get there. Let's go one step at a time. Nice rebound today. 120-minute chart. I didn't show you in the E-mini. Let me just go back to that for a second. That E-mini shows you there's a rectangle trading band right now, and it has 26.22s as resistance. We're at 26.14 right now. Actually up $1. This is very nice action. Good rebound. And it held that trend line that I showed for my subscribers this morning, that dash trend line support. That's very good. And in fact, the inside wedge, Chapman wave inside wedge, target support line was held exactly this morning in the daily chart, and he has that bounce coming. I like this. This is about time we had a decent bounce. Let's go to the S&P, SPX.X. S&P right now is trading at up 24 cents at 26.1476. Very interesting. It only took out yesterday's low by a fraction. Didn't even get close to the low of the second at 25.5380, and the low so far is right in the 25.75s. So this is good action, and it says that the stochastic is slowly moving higher. It's not great, but it is moving higher. On-balance volume has improved a lot. Stochastic is under 20%, is at 19.30. So I am only anticipating a bounce, a pretty decent bounce, calling it a bounce for now, and that bounce could last a few days. And we're looking at the MACD of the daily, still very negative, with the histograms improving. In the arch formation, the S&P did not even touch, or it certainly didn't take out, didn't even get close to the 2532.69 low of February the 9th. So that's a positive sign. I can get rid of this 120-minute chart right now. There it goes, gone. And the weekly chart leads us to the monthly chart, and that's what I spent time on last night. And what I'd said is that candle, that Chapman Wave Roman candle from February, you've got to respect it. And it did exactly what it needs to do in the Dow. It hasn't done it in the S&P. It got really close, but it hasn't touched the low of March the 9th. I think it will over the coming weeks. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's down 54 after being down 500 something. S&P's hunch.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and Paul says, will you be talking about margin debt today? Today's plunge will be caused by margin calls. There's nothing to do with trade wars. As CNBC wants you to believe, the left-wing moonbats are going to do everything to blame this on Trump. Nothing could be further from the truth. I hope you're not one of them. Paul, I'm just going to do what I see, and I don't see any reason at this particular point to do anything other than to mention that I think within the context of the situation in, say, credit card debt, stock market debt and all, it is all going to come to a head, but I don't think that's just yet. I think in a certain way, yep, credit card debt and certainly automobile debt. When I was looking around at different cars, just trying to get to go for test drives and all that, there were just so many people leasing cars, and I think that this whole thing of putting in the paper or in ads or everywhere you go, and it just says like $159 a month, and of course it doesn't tell you that no matter what they do, they're going to make that up either at the end or the beginning or one way or the other, and you don't know what you're paying. And for most cases, people are paying top dollar for the car. They're not buying it as if they're buying it and squeezing to get the best price. They're trying to get the best monthly price. And then what they do is they say, okay, 36 months. And I believe when you go to sign, sometimes they'll say, oh, by the way, it's 42 months. So just adding another 6 months because you really want to get your best price. Things like that are happening. And I think that that's a really important factor into what's selling cars right now. It just sounds like, geez, I have to have, say, one part of your exhaust system, just the manifold, or just say the muffler, or the any converter. These are really expensive things. So you say, oh man, I'd rather be leasing and all that. So yeah, that's a very big thing. So let's go straight to the continue. I just want to finish this. So you're looking at the IWM. We discussed that in detail last night, saying, yep, the IWM, the Russell 2000, is holding well, but it's really stuck in a fairly narrow range, and it is holding better than most, but it's not going anywhere. Even today, it's up 27 cents. But if you look at the chart, Trough E, I want to talk about this. We've got a call online. I want to go to the call. I want to talk about going all the way to a Trough D and a Trough E, not taking out the left side low. That is showing internal strength. I'll call it residual strength. And when that's finished, we start to go to lower lows. So let me do this. I want to go to our first caller. We've got Tony in Rochester, New York. Tony, how are you?
Good, Basil. How you doing?
Very well, thank you.
Yes, sir. On Gopher Protocol, GOPH.
I've never actually heard of it, and it's spelled GOPH, huh? Very good.
Yeah.
So do you have a position in this? It's trading at $4.27, up 73 cents, up 20% just today.
Well, I got out today, and I was just wondering your thoughts, if you could just look at it quickly and tell me a pullback on this or anything that you might see on this here.
Can you just tell me, what do they do?
They make patches and chips for tracking.
Oh.
So now they're getting
right.
into pets. They're getting into car tracking. They're supposed to hook up with Apple.
Have they got into teenagers yet?
Well,
for poor old parents, my wife didn't sleep for 4 years when my son was in high school.
They have mentioned that in their presses.
Oh, really? I was just joking. Huh.
No, they're a full tracking company. They're actually an old company. 10 years old or so. But I was just wondering. I know the chart is, it just went diabolical in the last month, not even a couple weeks.
Oh my! This is a stock that was just barely trading anything back in 2011, and then it had this incredible, must have been the story stock of the year back in 2000 and what can I even see this? Back in 2011, in 1 month, in September, it goes from, well, it's hard to say, from 100,000. Wait, something's wrong.
It split twice. So
I was going to say it must have split 1,000 times. All right, twice. Anyway, it goes from whatever it was.
Right.
Huge move. Okay, so the real stock action is really basically from mid 2017. So from about July. That's action I can understand. So you got out today. Fabulous move. This is a leg F in the Chapman wave in the daily chart. The weekly chart is only in a leg C. I'm going to do this again. I don't want to make any mistakes because, leg C. Okay. So I would have advised, if you had asked me what to do, I would have said take quite a chunk off right here because it's had a fantastic move.
Yeah.
But the move is not quite done. But whether it just goes sideways and it doesn't make much more of a new high is the issue. So that you've taken everything off.
Yeah, I got out.
Okay, so you're out. Now this is the way I would be looking at it. The weekly chart is saying to me, not only is this a story stock, but it's a story stock with validity because every time it's come back and held very close to the 9-period moving average. It hasn't broken down like that Eiffel Tower, like the uppercase A. They go straight up and straight down. And I'm told in the Den that there's a revenue stream, 4.6 million. I like that very much. It's a leg C in the monthly chart. I think this is a viable chart. Therefore, I think it's a viable company, at least for now. Right. So the only thing I would have said to you is I would have tried to keep some core position if you got in much lower down, because there's a chance that this, because it's a story stock, could, in fact, pull back a little bit, hold the 350s, and then suddenly zoom up to another new high because the way it's had consistently green candles, not just if it's a biotech, what you get is you get the spike. It's almost as if every 3 months a biotech company is giving their employees options, so they need to get the options, and you see a big spike, and then there's nothing there, so it comes all the way back, and then you see like a U-shaped pattern. This is a rising pattern. I like that. So I'm going to make two suggestions. One is On a short-term basis, I have to go to the 120-minute chart, and that 120-minute chart right now is so let's do that again. So it's A, B, C, D, A, B, C, D, E. Yeah, it's holding really well. It's still up 81 cents. It was, in fact, up to this morning, the high was, the high was
467.
467. Huh. That's incredible. Now it's trading at 437, 30 cents lower, which sounds, oh my goodness, the 30-cent pullback. No, it's still up 23%. So here's what I'm going to say to you.
Okay.
If you're able to take some of your profits and say within the category of the profit, I'm going to use some money management. I want to put some money into this, and I think it might be at a higher price, but the real buy that I want is at a lower price. We've got a break coming up. Let me give you some numbers. I'll try to work them out in the break, and I'll tell you this is the plan that I would have. Since you have a profit, it's nice to be able to do that. So
I'll listen to you on the radio, okay?
Okay, great.
Platinum,
Tony from
grains,
Rochester, we're
crude
going to
oil,
listen.
gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Basil Chapman with the Tiger Technicians Hour. We just had a call from Tony in Rochester. He's looking at GOPH, and GOPH is Gopher Protocol. They make a tracking chip, and the 120-minute chart has gone to a leg E. It hasn't the peak E yet because this bar isn't completed yet. But he's got out with a very nice profit. And now what I'm thinking is there are two ways of doing this. Sometimes when you've had a really good profit, in either an option or some low-priced tradable, and if you get out just perfectly, even though it can go higher, maybe it's too soon now to go right back in. But if you do go back in, I always say go back in a smaller, use profits, just go back in a smaller position, because your psychology now is still on the last trade. It's not on the new one. So let's look at this fresh, as if I've never been in it. In fact, I've never seen it before. And I'm looking at it at $4.43. My eye says that the 9-period moving average on the 120-minute chart at 3.48 is probably going to be tested. Will it be tested before this darn thing hits 5, or will it be sooner? I think it's going to be. I'm not sure it's going to be pulling back to 342, 338 with a little bit more testing of the 445 to 447 area. So I'm saying two things. One is just step aside, put in a bid of part of the position at $3.52 and another one at about 336. And the two positions should add up to a smallish position, but a nice position, right? It's a fresh position. Or you say, you know what? I think there's another day, maybe even 2 days of upside move. And if there is, I want to get in close to where it is now. Therefore, you have to have a much smaller position. And the number to get in would be 439 to 438. And there I'd have to have a very tight stop. So as I'm saying to you, there's two psychological aspects. One is you've just had a great profit. Now I've got to get back in because I think it can go up more. I don't want to miss that. That's one that usually costs you money. So that has two parts to it. If you do get in on a pullback, maybe another 10 cents down from here, and then you get in a small position, treat it only as almost like an experimental trade. This is one of those tides in California, 120-foot tide, and you have to be hovercraft onto the wave itself. And if it goes even higher than that, you're just perfectly set up. But actually, if you're on the other side, on the cliff side, and it's coming down and you aren't prepared, that can cost you. So the psychology is that you have to have new psychology. You can't have old psychology. You're done with that trade. And therefore, I would say, you're right, step aside for a day or two, wait for that 352, 347-ish area. That's where you can start. And give me a call if that happens. But I like it. I think it's only in C in the weekly. This chart does look like it wants to go to a D. And therefore, any pullback into the 350s should hold as it starts to make another U-shaped formation and tries to go back to another high within 2 weeks. So I hope that helps you. Monthly chart is still very bullish. There's something here, and I've written it down as something that I'm going to follow. So thank you for calling. I do appreciate it. I always appreciate getting a new name of a stock. Now, so just to get back to that whole thing with the margin debt, I think it's going to be an absolute killer. I don't think it's yet. I think that all the seeds are there. I don't want to talk about it too soon. I want to save it for when I really think it's necessary to discuss. Next question is BA. Did not make a low versus last Wednesday. Okay, let's look at BA. And that's what we're seeing in a number of stocks, which tells me that, yes, there could be a balance. Yeah, look, this is that H pattern, a nice candle today. Hey, it was a great candle yesterday. Just talking about the candle. I'm not talking about where it is. Boeing at 322, didn't take out the left side trough D on the 28th of 311.17. Yep, this can bounce. Weekly chart says it's only a bounce, and that bounce should fail. It should come back and do a lot of retesting of the 310s a little later on in April. So, yes, I agree there. Double bottom. I don't know about double bottom for the big trade. Oh, if you're thinking of buying it, you got to buy it right now at 322.50, and I would have no more than a 2% stop, and I would treat it only as a trade. This is not for me, it wouldn't be a position trade, a position play. Just a trade, and once it gets to, if it can get to the 328, 330 area, you just raise your stop as high as you can and let it take you out on a pullback. Bob wants to know Caterpillar. All right, Caterpillar, here we go. Caterpillar had a decent candle. Let's see. Yesterday was a decent candle, an inside bar. It needed to follow through today to go above 146.41, the 9-period moving average. Instead, it went all the way to the 200-period moving average. Because it hit the 200, or just about hit the 200-period moving average, this candle is the candle that can have a pretty nice percentage rally. And that rally could take it to the one at 143.21. Caterpillar, stochastics at 18%, not great. It needs to be above 20%. MACD's are looking horrible, but as a bounce, yes. As a weekly chart, nope, I think that there's a good chance the Caterpillar will make lower lows and lower highs. Doesn't have to break down, but I'm just saying that that's the pattern I'm seeing right now. Decent bounce, absolutely. Dow's now only down 15. S&P's up $4. Very nice. I like that. I was getting tired of those down sessions. Even though we're short, and we're staying short. We short the Qs from right at the top. We short the Dow from above the 25,400s. This is a tradable bounce, and we'll deal with that as the days unfold. Next question is Bank of America. Yeah, we're out of our, so in a way it's a pity, I should have been adding, we're out of our position in the Bank of America break-even trade. It went all the way up to 33. I mean, that was a 4.3. It was like a 12% gain, gave it up, and now it's acting quite nicely. Let's see the XLF. XLF is trading at, yeah, it's the same thing, right on the 200-period moving average. You see how much more important the orange line is, the 200-period moving average, to the gray line, the 200-period simple moving average. That's the one that most analysts follow. This is the one I love to follow because it just gives me much more detail. Look how many times it's been hit. So it's coming back up here. The XLF, the financial S&P Select FIDA fund, and 2774 to 2830. That's the area. If it can break above that, I'm going to have to be pretty impressed with that. Let's have a look at Goldman Sachs. It should be up today. Yep, it's up 13 cents. Not great. You see, Goldman weekly chart is saying to me, yes, it's in the process of trying to build some kind of a base. It isn't quite finished yet. Hey, I could be wrong here, but that's the way I'm looking at it. Next question I had was, SPY, today's action means a bottom is in. Sarah wants to know, let's go to the SPY. The SPY had I think it was an 11.7% correction from the high it was made January the 26th, same day as the Dow, its all-time high. 286.63 was the SPY, the S&P Select Depository Receipts. And what we're looking at, it goes to 252.90 on the 9th of February, an 11.7% decline, runs to a peak D at 280.41, and then pulls back quite sharply. This one tested the 200-period SMA, broke it, and now it's above both the SMA and the EMA, 200-period moving average. I'll talk about that as soon as we get back. I don't think this is all done for the SPY, but a bounce, yes. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes, let me just do this quickly. I have to find out where the question came from. I think it was Brandon. I'm pretty sure it was Brandon. I want to know about the USD CAD dollar Canadian dollar currency pair. Yep, a peak in the weekly chart and in the daily chart with a doji and a silent doji following it, and it made the H pattern and it's taken it out. That's exactly what we discussed last night in terms of patterns and candles. There it is. Pulls back. There's the down move for the back of the H. There's the H itself, and it closed below it. So it's acting purely at 1.27936. And if you're looking, it was the 10-minute chart that you sent me. The 10-minute chart had made a peak. This is an F, and here's a G. Unusual G, but it's a G nevertheless. And now it's pulled back, and it's the cup formation, that double top formation. So, yeah, okay, and the E-mini, look at this, E-mini is just bumping into some resistance here, a little bit of resistance. So this is the 10-minute, is in leg D in the E-mini. 1 peak D and then an alternate count, then it goes to another leg D right now. In the 10-minute, it's a peak D in the 5-minute, maybe going to be taken out right now. And you'll see on the left here, you'll see at 2624.50 and 2619.75, you're coming up into some strong resistance area in the Chapman wave automatic notations of the resistance and support levels. All right, let's get back to our story. So, here's a question. I needed to finish that up. I didn't realize that I hadn't finished. Gold is now up at 1339.4. And what I said to subscribers yesterday, and I again this morning, is that the dollar is becoming a lot more interesting to me. And I wouldn't be surprised if this administration starts to do something with the dollar. Look, let me show you. So gold kind of looked great early this morning on the day. It was helping to improve the weekly chart. Now it's just ho-hum, back to that trading band. But the dollar didn't respond all that much earlier, and even now it's down 13 cents at 90.75. But I think it's holding pretty well, and it's saying to me, keep it as a socio-economic, political weapon that the dollar could be in fact used, and we might see that whatever the reason, administration might want to have the dollar rally, might have to want it to go even lower. But in the meantime, it's right in the middle of an area, and I can just tell you this: I've been saying it for I don't know how long, for months. If the dollar can close in the 91.20s or higher, I'd be very impressed. If it pulls back and starts to trade under 89, not impressed at all. Those are the parameters. So yeah, the dollar can do a lot. So now let's get back to our story. Silver is trading, and you remember silver was not acting as well as gold. And that to me is, I want parallel. I want I want the generals to be followed by the soldiers immediately. I don't want one of them leading and the others saying, wait, we haven't finished our coffee break. Nuh-uh. Silver has to follow gold, and it wasn't doing very well, and it's still not doing well. If you look at high-grade copper had a bit of a bounce. Then it was very weak this morning. Now it's coming back a little bit. Copper's just in that range that says, watch it closely. A breakdown below 2.90 is really poor, and anything above 3.1 says, okay, not bad. Okay, now let's go on. We want to talk about the TLT. So this is very interesting. Bonds are down 12 cents at 120.82 based on the TLT 20-year Treasury bond ETF. Within this context, look what we've got here. You've got yields. The 30-year is up 7 cents at 30.25. The TNX is up, it's at 27.88. And you've got the FVX, the 5-year. It's at 26.03. So I've been talking about yields probably holding here. And if the market is going to be extremely weak and really break down, start to close under 23,000, I think that yields will start to come down as money really does flow into T-bonds. So this is really interesting what we've got here. Now look, go to the back of this chart. You've got wood, the iShares Global Timber and Forestry ETF, holding very nicely. It's up 15 cents here at 78.40, up near the highs. And finally, you've got a bit of a bounce because Toll Brothers, I think, came out with very good earnings. So Toll's helping. And look at that. Finally hit that trend line, major trend line. Where it was over here. Did we even think it would hit that trend line? Well, we did, because we got that peak F and it pulled all the way back to a leg C to the downside and hit that trend line exactly. So now you can have a bit of a rally. And once you've got, finally, you've got some kind of a rally in the home builders. Let's see if Home Depot is going to be a beneficiary. Should be. Yep, there it is. Nice candle on Home Depot. Up 94 cents at 124. Went under the 200-period moving average here. It hit the 200-period simple moving average. I wonder if it's in play for much more than just a bounce. It looks to me, based on the chart formation with the MACD starting to improve, the stochastic okay at 36%, but well off the lows of the 15%-ish area. That, yeah, Home Depot could try to rally from 174s, hit the 9-period moving average of 180 in the weekly chart if this rally does continue. So now the Dow's down 38, S&P's up 3, a little bit of a mixed market here. I don't know why. I feel I'm forgetting. Oh, crude oil. I knew I was forgetting something. Crude oil had a big up and down spike earlier today. Now it's down 22 cents at 63.29. It plunged and it rallied and then it came back, and now it's forming some kind of almost like a Chapman wave Roman candle, but it's way off the top, so it doesn't count in that way. In fact, it could turn into a bullish candle. But in the meantime, it's down 21 cents in range. I think I've covered everything I needed to there. So here we go. IYT, that's the transportation iShares, trading at down to 184.80. So there are a number of reasons why I'm still negative the market and why the candle that I'm looking at, see the Roman candle in the transportation index is still active. You've held the 9-period moving average in the monthly. I'm looking at this and I'm saying I would not be surprised in the month of April that the IYT tests its low that was made back in February. I think that was the week of February the 9th, and we test the 176s. That's 8 points lower. I think it's going to happen. So that's the reason why. Overall, I'm still looking at lower lows and lower highs. I'm anticipating bounces like this, but bounces like this also usurp a lot of energy unless you can get a full-blooded 700 points to the upside on a closing basis from the most recent low. And that's really what I want to see to be convinced that it can go even higher. Next question I had was, I think I saw one with an ETF that someone wanted to know about. Oh, man. Did I do that yesterday or not? Oh, there it is, ITB. ITB, which is the, was that ITB? ITB. I bought ITB. Oh, there it is. Isn't that the home build? Yeah, that's the home. Oh, that's exactly what we're talking about. Wow, very nice. Al bought the IBT right off the 200-day at 39.25. It's trading at 39.93 right now. Good eye. What do you think? Thanks. Well, I think that that was the H pattern. A test of the left side low, closed above it within 2 bars, and now it's going for the left side highs that were made in the arch formation. I like it. I'll talk about it when we get back. Basil Chapman, Tiger Conditions Hour. Dow's down 50, S&P's up 1.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Folks, don't forget to listen to award-winning Steve Rhodes coming up next. So remember, I mentioned these resistance, the Chapman wave resistance levels automatically generated right here, and we turned around in the 2-minute chart of the E-mini at a peak E with the MACD down very sharply and the stochastic down. This is at least a little bit of a restive period right now. And I did put it down arrow. It was a little premature because I didn't realize as I did that the stochastic was still at 87%. Normally I would have been looking and would have only put a plus. Let me just go back to that. I don't have the confirmation to do that in the Chapman wave methodology just yet. So this is a plus sign. Just to say, watch out, red plus sign above the E always is just a heads up. So, and now you've got a leg D. And in my own trading, I like it when I've got at least 3 time frames. The 2-minute leads off the 5-minute. I like if it's a D or an E as you're about to turn down And I love if it's like a D or an E in the 10 minutes says, hey, you know what? If I get this right, I can get the short position based on the 2-minute chart and then wait, have the payoff. Learned over the time period of time. Try to wait, see what happens in the 5-minute. If it works in the 5, let's see what happens in the 10-minute. This is your best opportunity for some kind of trade. In this case, a short side, even though the general trend has so far been magnificently up. This is just a 2 and a 5-minute chart and a 10-minute chart. And we'll see. But in the meantime, that's what I'm looking at. So the webinar last night spent a lot of time talking about the arch formation, talking about the lowercase h, the dreaded h, what happens at that left side low. And you can see you've got a lot of evidence here that this left side low, look, in the ITB, was tested successfully, says that you should rally in the lowercase h pattern. You should rally to the next arch high, and that's the high of 39.90 made in the 27th. We've already done that. If it can close above that, then the next level is right there at 40.48. That would be my next upside target if I was in this trade. And the thing now is that the 39.26 level is your tremendous support in the 9-period moving average of the daily chart. So that's how I like to do things. And I'd be using the 120. So that's putting into practice some of what we discussed last night. Folks, there's still time. If you're interested in my work, you want to get me subscribed to my opening call, you'll get my webinar from last night. It's archived 30 days, a lot of information. You want to look at some of it over and over. Thanks for being here, and have a great day, and I will see you tomorrow. Stay tuned for Steve, Dave, and Tom.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.